Welcome back. In this video, I will take you through some case studies that I have selected to give you a greater insight into the planning process. These case studies will help you understand what you should be looking at achieving given your set of circumstances, your current situation. I've had situations where people have moved from one set of circumstances to another, and these case studies have helped them understand how to plan or what to look for given their new situations as well. So let's have a look. The first one is about Samira. Now, Samira was a single mother. Her husband had passed away about three years ago, and as you can imagine, her life was not easy, right? Her income as a stenographer was barely enough to cover her monthly costs. So she was making about 4,000 rupees in her full-time job as a stenographer, and she would take on additional jobs as freelance work on the side. It was hard work, but what made it worse was that she was forced to be away from her son, who had started acting up and even started keeping the wrong kind of company. So Samira's gross pay was 5,200 rupees. She paid taxes of about 475 rupees, which left her with about 4,750 rupees. This was her income statement, and this is where she was currently. Her monthly expenses was a rent of 1,200 rupees, food, which cost about 2,000 rupees, travel of about 500, and school fees of about 1,000 rupees. Now, where was Samira and where did she want to be? Samira's money flowed in through her income column and out through her expenses. She had no liabilities and no assets. Samira had the cash flow pattern of the poor. Samira wanted the ultimate goal of financial freedom, to have her passive income meet her expenses. She wanted to own a home someday, but she wanted right now to have a life free from the stress of not having enough money. She felt that 20,000 rupees of passive income was more than she will ever need. First though, she needed to make some short-term goals. She wanted to increase the amount of money she made every month to achieve financial security, while also spending more time with her son at home. The analysis is fairly simple because in Samira's case, there's only one financial statement involved, the income statement. So how much did Samira keep? Samira's total monthly income was 5,200 rupees, less the total monthly expenses, which was 5,150. The difference is how much she kept of just 50 rupees, or less than 1% of her income. Now, did her money work for her? No. Samira had no passive or portfolio income. What was her income after taxes? So Samira's total income per month was 5,200 rupees. She paid taxes every month of 450 rupees. So her net income was 4,750 rupees. The percentage of gross income that she paid in taxes was 8.6%. How much did she spend on housing? The total housing cost was 1,200 rupees, or 25% of net income. How much did she spend on non-performing assets? So the total amount that she spent on non-performing assets was 10,000 rupees, and her total assets, as per what the bankers quantify it as, was also 10,000 rupees. So she actually spent all the money that she had on non-performing assets. So what was her returns on assets? So Samira had no assets and no passive income, so there was no returns on assets. How wealthy was she? Now, as we've seen before, our definition of wealth is not how much you have, how long you can go, how long you can survive without having to work. So in Samira's case, she was 0 days wealthy because she had zero real assets, and her total expenses was about 4,700 rupees. So she was actually negative. She could not afford to not work even for a single day. So Samira's 5 years plan. From her analysis, she was able to understand that she needed to build real assets so that she can create passive income for herself. In fact, for Samira, the idea of financial freedom, like many people, was really a turning point. The idea of making money and financial freedom was very exciting for her. You can say that was her reason to be. That's the why that we have spoken about multiple times. And the thought of spending time with her son, gosh, that was really exciting. That was really motivating as well. But as exciting as these objectives were, she did not know where to start. You see, she relied on financial advice from her family and friends who struggled themselves financially. And she also knew that they would try and discourage her if she tried something unconventional. Now, since she couldn't hire any professionals, she decided to reach out to these non-profit organizations that provided help to women. Now, as a stenographer, she had acquired certain secretarial skills. So if she could provide these secretarial services from home, she could make more money than she would do at her job. But she needed the initial capital to set herself up. So her goals for the next 5 years were, number one, to find advisors who could help her set up her business, obtain the equipment that is necessary to start the business, and then begin building a security fund for emergencies. She felt 3 to 6 months of her cost was enough for the moment. So how did Samira do? While doing her homework on organizations that provided help to women, she zeroed in on one that was involved in training and empowering women to be financially independent. Now, they helped her not only by working with her to establish a business plan, but also assisted her in getting credit to start her business. They provided her with a lot of free resources that assisted her in setting up her business. And she also took local courses that helped her understand what goes into setting up her business. This included not just accounting and record keeping, but also marketing and business planning. So as part of their social work, they also provided computers to people like Samira who wanted to start up their own businesses. And Samira met the requirements that they had, and she was able to obtain a computer through that. With this help, Samira was able to get herself set up. She printed brochures that she was able to distribute through low-cost channels, and soon her phone started ringing with requests for resumes and research projects. She had a flair for this work, and soon she started getting regular work from local businesses. She kept her full-time job, and her new part-time self-employment started paying her about 3,000 rupees every month. And she was also able to save some tax by expensing some items that she was paying with before tax money. Now, this additional money went to set up her security fund. There were some additional expenses along the way, but by the end of 5 years, she was able to create a savings of about 1,50,000. But more important than that, she was able to get a sense of confidence that she would be able to succeed and achieve her goals. She was so grateful for all the assistance that she had received from this organization. So she and her son started volunteering for this organization. In fact, her son was very encouraged by what his mother had achieved and found a positive outlet for all his energy. So how wealthy had Samira become? Samira now has total assets about 1,50,000. She had total expenses of 5,150. So Samira was almost 30 months wealthy. That means she could quit her job and stop working part-time, and she could survive for almost 30 months. So what's next for Samira? After launching her business, Samira took stock of her situation by preparing a new financial statement. She went through the exercise of where she wanted to be and set up new goals for herself. And now she's interested in learning to invest and building a portfolio of passive income. But more than anything else, Samira has gained a sense of control over her financial situation. She's confident that she can achieve any goal that she sets for herself with the right advisors and creating a plan.